This video has been designed to help elevate your level of understanding when it comes to market structure. When we talk about market structure, I want you to think of time and price. When the price lines up with your confirmations at the right time, this is an ideal condition to identify where you may be entering. In this video, we're going to be discussing 3 ideas around market structure. First, how I personally read the structure of the chart. Second, how to identify potentially significant structure levels. And third, we'll be taking a look at a couple of examples and discussing how we can use the structure to help us determine which direction the market could be heading in next. So let's start with how I personally read the structure of a chart. And in order to do that, I need to give you a visual because we're going to be focusing on candlesticks for the duration of this training. So as you can see, I've just drawn a nice red candlestick. If we were looking at the actual chart, the red would represent a movement down. When we take a look at the candles, there are 4 main components. We have the body, or in other words, where the candle opened, and where the candle closed. If we're looking at a bearish candle, a downwards moving candle, the open would be at the top, and then the close of the body would be somewhere lower than where we opened. If we were looking at a bullish candle, or a blue candlestick, using the color scheme that's on my chart, it would be a little bit different. Instead, the open price would be at the bottom of the body, and the closing price would be higher than wherever that candlestick opened. Sometimes you're only going to see a candle body, whether the candle moved higher or lower for the duration of the time it was printing. More often than not, the candle is going to include a wick. For a bullish candle, the top part would be the high, and the bottom part would be the low. For a bearish candle, it is the exact same thought process, where the top would be the high, and the lowest point on the wick, of course, would be the low. Each candle is broken down into 4 main parts: the open, high, low, and close. And whenever we're looking at an example where price is still moving and it hasn't actually closed yet, the close will instead represent the current price. Open, high, low, close can be found very easily through TradingView if you're using that platform. Up here at the top left-hand side, you can see that there's a O, an H, an L, and a C, and it will change depending on which candle I'm hovering. If you don't have that for some reason, you're going to go into your settings, go under status line and make sure that OHLC values are checked. And it's going to put that up there for you on the screen. Now, when we're looking at market structure, we need to keep in mind where price has opened and where price has closed primarily, because the majority of trading action happens between the open and the close, the actual body of that candle. And you can confirm that by using indicators such as the volume profile. The high and the low can also give us significant information related to what direction the market could be heading next. So let's clear off the chart. First and foremost, when we are reading the candle structure, one thing that I am always paying attention to is where the current candle is at relative to the ones before it. In order to predict what might happen on the right-hand side of the chart that hasn't actually happened yet, it can be valuable for us to look left and do some previous price action analysis. One thing that stands out to me about this current candle that's printing is that the body is completely engulfing the body of the bullish candlestick immediately to the left. We can see that at this point, there's a fairly high probability that this day is going to close lower than where the previous day opened. We can see that ever since we made this high, we had the market sell off fairly significantly. It reacted off of a past key structure level where we went up to the all-time high as of the time of this video, and then sold off very aggressively. Once we returned to that, we could see that there was still selling pressure. We had some distribution and profit taking for everybody that had entered positions up until that moment. Once we saw that significant reaction, if we were to measure it with our Fibonacci, using the candle bodies, we can see that we've had a reaction between the 70 and 61.8% retracement. So we can highlight that. And we can take the fib off of our chart once again. Now, when we're thinking about the probabilities of what might happen for the duration of this candlestick, and even as we move into the next candlestick that's going to happen, by utilizing the information provided with us inside of the candle bodies, where price opened and where price is going to close, we can take it a little bit deeper and we can identify this right here was a significant turning point. We had the market sell off very quickly, slight little bounce off of a whole level, 3,000, to then come lower one last time before immediately shifting aggressively beyond an old high. This information, if we come back to the daily time, we can see that right around where current price is, if you follow this red line, you'll be able to notice that it was at one point a past key structure level. It was the resistance that needed to be broken in order for price to go and make a new all-time high. We can also see that it's at a whole level, 3,025. Those quarter levels have a lot of influence on human psychology and a lot of influence on the decisions that people will be making when they are putting in their trades. Think of it like this. Is it easier to buy or sell at a whole price such as 3,025? Or is it easier to buy or sell at a specific level such as 3,025.5? Most people will take the easy route, 3,025. They don't factor in the decimal place. How could we utilize this structure that we're seeing to determine where price could be heading to? When it comes to identifying potentially significant structure levels, we want to be looking for those obvious supports, those obvious resistance, because the market is generally going to move to or through areas that are completely obvious. We want to be mindful of whole levels and how they line up with past price action. And we want to be able to recognize what is going on within the bodies of the candlesticks. Noticing where this candle closed, we had a lower high that was created prior to the market structure shifting lower. When we bring our attention to what's happening here, slight retracement, we filled in some imbalance, market consolidated, and then at the right time, we get a candlestick that looks like this. Notice how we saw over a span of 4 hours movement to the upside. We eventually came back down, closed right around where we opened. If you were looking at this, and you could see imbalance, you could see an old low, you could see whole level, not just the quarter level of 3,075 where the market was trading, but how there is a confluence of factors that are lower. Heading into the right time, New York Open, when the S&P 500 is generally most volatile. As we walk through one time frame at a time, And we recognize things like old lows or old highs that could get ran, and they line up with other confirmations we're looking for in the markets. By utilizing a multiple time frame analysis, paying attention to the open and closing price of where the daily is at, what's going on in an intraday time frame, such as the 4-hour or 1-hour perspective, you're able to line things up within the evidence that the candles are demonstrating to you that will help confirm what are the probabilities that the market is going to go up compared to the probabilities of the market trading lower. And so as this day has moved on, we've seen that the market has come down. It's taken out 2 old lows. We're moving closer to a whole level. And if we were to speculate what could be happening as we head into next week, we can take the same ideas, the same philosophies, and pay attention to the information that is displayed to us within the structure. For instance, 29.75, that is a quarter level. We can see that in recent times, within the last 3 months, as of the time of this recording, the market has had substantial movements to and eventually through that price level. Once the market traded through it, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 consecutive daily candlestick closes where the open continued to move higher. Higher open, higher close. Higher open, higher close. Giving us evidence that up until the point where we reach that past significant structure level, there were plenty of willing buyers. Is it a coincidence that the past key structure level lines up near 3225, another quarter level? Let's not make any assumptions. Bringing our attention back to 29.75. What happens if we were to extend that left? Not too much evidence, and even though this price action is a little far back, what we can do, come back to the intraday perspective, we can notice how that price level lines up with the move we were previously analyzing. We had this last bearish shift, and then a spring was created where the market came back up. One last test before expanding very rapidly and taking out that old high. If I had to plan something around what I believe could be happening next in this market, just by looking at the candlestick bodies, I would believe that the probabilities of this moving lower are substantially higher as of this time. How low could we be going? I would have a point of interest at 29.75. I would be looking below this old low. I would be looking inside of this structure right around the 2900 whole level. How we would get there? There are a million different scenarios that could happen. Perhaps the next candlestick that prints makes a wick to the upside. And while that is happening, we see it looking bullish, enticing buyers to then move lower and close below where it opened. Right? That is one of the scenarios that could happen. And while I don't want to speculate on all the different types of price action that could occur as we continue to see more and more candles develop, the structure at this point in time is giving us clues. And if I were looking to take positions, they would be targeting more downside. Now, the cool thing about structure is that in any given moment, we're getting more and more of it. Whether you're looking at a monthly chart, a weekly chart, a daily chart, an 8-hour, 4-hour, 1 hour, anything lower than that, or anything in between. Reading the bodies, where price opened and where price closed, can be applied universally. Is the market showing you that there are willing buyers? Are we seeing consecutive candles where price is opening, trading down, trading up, closing higher than where it started? And then the next day, is it doing the same thing? And the day after that, the day after that, the day after that? Or are we seeing evidence that the pressure has shifted towards the sellers? The higher the time frame, daily, weekly, monthly, the more information that's condensed into a single candlestick. Higher time frame charts are absolutely essential when you are establishing a directional bias on where the market could be heading next. The information between a daily candle's open, high, low, and close, in my opinion, is more valuable for determining market direction in contrast to if you are looking at something like a 15-minute time frame. The information in here is valuable for other reasons. When you're reading the candles, I want you to realize that structure can be applied universally. At this time, we've got gold up in front of us. And this time, I've put us into replay mode so that the candles to the right are hidden until we fast forward. So that as we analyze and we talk about some of the significant things that happened within this structure, you'll be able to have a much clearer picture as things unfold as to why we got certain reactions and where might be the next target levels. Looking at this chart, there are two main points. Trading up here and the trading down here. What separates this is incredibly significant. We have this really easy to identify support level from the past. That got broken with a very volatile move, where in that single day, April 12th, 2013, the price of gold dropped over 5%, be the equivalent of a $78 per ounce decline. And if you margin trade, that would be the equivalent of about 780 pips. Once that level was broken, and we had the market structure shift to the downside, we can see that price, although it attempted to return to it, during this entire 6 years, where the market traded in a range and individuals were given an opportunity for accumulation, this imbalance had been left open. So what happens if we mark that key structure level out and we narrow it down to a specific price point like 1500 as a future point of interest? And then we bring our focus instead to the 6 years of accumulation. From a weekly perspective, people around the world are going to be looking at this as resistance. Some people will draw it as a zone. Some people will have multiple price levels at old highs. Other people will just generalize and use a singular level, such as 1400 in this example. Regardless, when we bring our attention to what the market has been doing in these consecutive weeks, taking out old highs, obvious resistance levels that we can see clearly, capturing that liquidity, giving us ample information within the bodies, higher opens, higher closes. Moving incredibly bullishly. Even giving us a little Pepe Frog candle. If you don't know what that means, this image is all you need for now. If you had to guess based off of the information that you've learned up until this point, what are the probabilities of the market continuing to go higher, targeting a past significant point of structure, compared to the markets just turning around and moving lower or continuing to consolidate based off of this price action that we're seeing? Consecutive candles. The market trending higher as we create higher lows. Lots of bullish evidence exceeding old highs. Where do you think next week goes? If you guessed higher, you'd be right. As that week prints, we eventually arrive at a point where we get a retracement. But in that same week where the retracement happens, we create a nice little wick, come back to a bullish candlestick body. If price closed like this, what are the probabilities of us selling off compared to continuing to move to the upside? Higher open, higher close. As of the time that you'd be looking at this candle, higher open, higher close. Maybe you found an opportunity in there for a buying scenario utilizing the smaller time frame charts. If we think about how much movement happened from where that candle opened at 1410 to the high of the wick that had not been created yet, it's almost 300 pips. Eventually, after weeks of consolidation, paying attention to the candle bodies, higher lows, coiling up, getting ready for an expansion. From the time that that last bearish candlestick happened to the engulfing one that followed it, we had created a significant old high. We had allowed enough time to pass for opinions to come into existence, for buyers and sellers to be taking positions. And remember, movements like this are natural. The market is never going to just go completely up or down. It moves in both directions. We just came out of a 6-year accumulation. Of course, we need to bring some new structure into existence. But then at this point where we see a single day trade down, retest the body of this last bearish candlestick that exists prior to the bullish evidence coming into the market, we return to it, expand beyond an old high. At this moment, what are the probabilities that we continue heading towards our price target? The following day, we see some bearishness, and even the days after that, we return to that same structure point in the market. And then it happens. You may have been tricked in here, as is the case for many people around the world that have the fear that they're going to miss out, so they end up buying it up here only to immediately be taken into drawdown. Being patient, waiting for your price. Is it a coincidence that we had the market revisit 1400 one last time before expanding to our higher time frame target? Now, as the market has continued to develop, and as we've seen more and more price action come in, we get movements like this at old imbalances where the market will build structure. Anytime that there is a gap, it is logical that we are going to see significant moves to and through that level within the price action. And we can agree that these levels of volatility, these large candlesticks, thousands of potential opportunities. If we had to guess on what are the probabilities of where price could be heading next, in the long term, are we going higher? Are we going lower? We've got a pretty clear upside target, 1800, that I personally believe we are heading towards. Aside from that, the only other bullish target that makes sense to me is 1920. That is the old all-time high using this data feed. If and when we get there, who knows how high price is going to go? When are we going to get there? Only the ones influencing the market know. All that we can do is follow along with the structure and continue to analyze key levels where the market has significant moves to or through, while simultaneously paying attention to the open, high, low, and close, and doing our best to interpret the chaos that is demonstrated to us within the candles. One more example that you may find valuable is over on a currency pair. We're looking at USD CAD. Remember that these ideas, they're universal. Whether you trade currencies, whether you trade commodities, whether you trade indices, whether you trade companies, whether you trade digital currencies, these ideas can be applied to any chart at any time. Obvious resistance level. Very equal, right near the 1.47 whole level. At the time of this video, it has not been traded through. Will it be traded in the future to or through? We'll have to see. But backtesting this move, the one that brought us up and to that level in the first place, whether you analyze in here as part of your own personal study to see what information, what clues could you have seen within this price action the last time that we were up at these levels to be used as areas you were targeting. As the market gapped up and continued to give us consecutive candles where the market was opening higher than where it was previously and showing lots of strength up until we arrived at the seemingly obvious resistance level. If we were to interpret this and think about the probabilities of the market continuing to move higher or coming back down to fill in this gap, once we started to see some evidence that the market was going to be moving lower, watch what happens within the price action. We have this high. we get this low. Market consolidates. Lower high, lower low. We continue to see price action develop. Again, we see that the market is unable to trade higher, and instead we make a nice equal low. We come back up once again, and at this point the market had been ranging for over 2 months. Yet again, lower high. Now pay attention to the bodies of these candlesticks. From the last high that was made, right in here, we see the market trade to the opening price, give us a lower high, and then we get an engulfing bearish candlestick. The day after that, more bearishness. Lower open, lower close. If you were looking at price action here, what are the probabilities in your opinion that we're going to take out this obvious support level? The market on the following day, new week, comes up and trades into the candlestick body of the lower high. We continue trading because, it was an engulfing candle. Notice what the market did. We again return to the body of a previous structure level utilizing the higher time frame chart. As this structure has continued to develop, we've arrived at a point where we have been in a range for a total of about 52 daily candles. We've had lots of information from the time that this high was made to the time that this low was made. We had a lower high, a lower low. We had an equal high. We had an equal low. We then had a lower high, another lower high, and yet we still had those equal lows. Big bearish engulfing candle now creates a triple bottom. To then do the same thing where we return to that lower highs candle body. And then there she goes. Even by waiting and not taking positions this entire time, if you didn't feel confident, if you didn't have confirmations, if you simply weren't trading at that time and you're just now looking at this example, this is what I classify as a clear market structure shift. And now the probabilities of targeting this gap are incredibly high based off of what's happened. And so some more time passes. We eventually trade down and into the gap. We eventually fill it completely. And then we even trade through it a little bit more before eventually seeing some buying activity. Fast forward to this current day. The market has been coming up and filling in some old imbalance on where one of those significant market structure shifts happened. We've been seeing higher opens, higher closes. Where could price be heading? If I had to make an educated guess, my first target right here, right near the 139 hole level, right near this significant structure, where we had a obvious support, an incredibly volatile market structure shift, and no opportunities for the market to trade back to it, at least as of this moment. Are we going to trade to there or through there? Time will tell. But for now, we use it as a target. And we continue to read the candle bodies. We covered a lot of information in this video. And while this single video by itself will not give you the experience you need, the examples within were just a few of many that are used to effectively train your eye so that when you're exploring the charts on your own time, you can develop that level of proficiency. You can develop that level of confidence. You can develop the experience that you need reading the candle bodies, paying attention to where price opens, where price closes. Are we seeing a willingness to trade higher or a willingness to trade lower? And what are the probabilities that we will be targeting an old high or an old low? A psychologically powerful whole level, an obvious support or resistance level, an imbalance, such as this clear, visible gap, or some other price level that you deem significant. Realize that market structure, it is everything you will ever do. It is everything you will ever analyze. It is other people's opinions. It is other people's emotions. And it is something that you need to experience. Put in the time, don't rush the process, and realize that your development is going to be a completely unique experience from anybody else that's ever interacted with these markets.